What is going on, everybody? Today we are going over Coca Cola Stock. Warren Buffett has a major stake in that since like the 80s, like 40 years ago. We're gonna find two things in this video. Number one, the fair value of Coca Cola stock as of today, because we want to buy today. And number two, the price that Warren Buffett will be a buyer, even though he is already a buyer. If he was going to buy today, we will find the price that he would actually pay to buy and hold Coca Cola stock forever. So let's get started. I'm in the Excel. It's called How to Value a Stock Like Warren Buffett, which I have created, and you can grab a copy of this in the description below in my Patreon page. So what do we have here? Company name Coca Cola. We need to find a couple of things. First item on our list is EPS, earning per share, and the next item on our list is the growth, how Coca-Cola is going to grow in the next 5 years. So we're going to find those two numbers in Yahoo Finance. Let's go to Yahoo Finance. That's where we are. Coca-Cola, ticker symbol KO, price of around $53. That's where we are. Market cap 228 billion. That's like 5x from here to $1 trillion. Could happen in the next 5-10 years, perhaps, who nobody knows. 52-week range from 36 to 60, so we got a 10% discount on the 52 high. According to Yahoo Analyst, it is overvalued by 22%, something to consider. So they assume the price is about $40 fair value. We shall see the price according to the fair value Warren Buffett formula in the Excel. 1 year target 56.6, which is, I don't know, like 5% from here. And we got a very juicy dividend of 3%, 308. Anything over 3% for a solid forever company is pretty awesome. Let's put on the details that we need. Number one, we got this EPS TTM, earning per share trailing 12 months. We got 1.93. So that's number one. And number two, we're gonna go here to the Analysis tab. Okay, click here, scroll all the way down, and we're looking for this next 5 year per annual. We got 2.86. That's yeah, you know, it's not a good number. They're not growing. It's a mature, super mature company. They made their growth in the last 40 years or so. Current year they're down 10% growth. Next year up 11%. Next quarter -6. Now people don't really drink Coca-Cola as they did in the 80s, 90s, 2000, and so on. People are thinking healthy and so and such. So we're gonna find the fair value of Coca-Cola. Yeah. So we got, I'm putting this number 286. So in the Excel I got EPS, I'm putting 193, and the growth rate is 286. That's what I'm putting, 193 and 286. After that, we need to find a Coca-Cola AAA bond. Let's go over the financial statements to read financials for beginners, to find out why Warren Buffett was a buyer 40 years ago and why he haven't sold and most likely will never sell ever again. So let's go to Yahoo Finance yet again, read financials and see what we see. Back in Yahoo Finance, I'm gonna click financials. We're gonna read financial statements for beginners. Super easy, guys. You don't have to be afraid. Let's click. I'm gonna show you a couple of things in here, mostly the ratios that Warren Buffett is looking for when he analyzes a company to buy and hold forever. We got a couple items. Number one, income statement. After that, balance sheet, and after that we got cash flow. So we're gonna start with the income statement. That's where we are now. And what we would like to see is find two ratios. Before we find those two ratios, let's see in a glance total revenue. We would like to see the total revenue growing year after year after year. So you can see here it was 41 billion. 2017 it was 35 billion. It went down, the revenue went down. 2018 it went to 31 billion. That's not a good sign. 2019 people start drinking Coca-Cola again, back to 37, and so far the last trailing 12 months we got 33. So it's not consistent, it's not a good sign, but you know what, let's see the ratios that Warren Buffett is looking for. But they're not growing as they should have grown as they grew like 40 years ago. That's not a good sign. I myself drink Pepsi. I don't drink Coke. I stopped drinking. There's too much sugar, at least in my opinion, and I like the taste of Pepsi better. But that's just me. Let's see the ratios that Warren Buffett. So I'm looking for two ratios, not just me. Warren Buffett is looking for two ratios. Let's see how Warren Buffett reads financial. First ratio is this one: gross profit, 20 billion right here, and you divide the gross profit by the total revenue, which is 33 billion. And Warren Buffett would like to see a number of 40% and up. Anything around 40, Apple is 38%, for example. That means the growth is pretty wide, pretty good, and they can expand. Let's start with the gross, then move to the net. So we're gonna take our calculator out. We're gonna put gross profit 20 billion, okay, right here, 20,050, and divided by 33 right here, total revenue 33,471. I would like to see a number over 40, and we got ourselves 60% growth. Wow, that's pretty awesome. I don't have Coca Cola stock, so checkbox number one. There's a reason why I bought Coca Cola. 60% profit is pretty awesome. Let's see the second ratio that we need to find in the income statement, which is this one, the net. We would like to see the net income after the gross. So if the gross is 60, Warren Buffett would like to see 40 gross, and he would like to see 20% net. He says in the book, The Intelligent Investor, not him, Benjamin Graham, if and everything that he talked in his letters to shareholders of Berkshire Hathaway and all that stuff. By the way, next video is about Berkshire Hathaway, so don't forget to subscribe to my channel. That's a good time to say so, as you will see more valuations of other stocks. But either way, Mr. Buffett says that he would like to see 20% net. That means that for every dollar the company invests, they get $20 back, and that means that they can expand, invest, and grow the business forever and ever, and make their shareholders filthy rich as long forever. So we're taking this number: net income common stockholder 8.3 billion, 8333, divided that again in total revenue 33,471. And we would like to see a number of 20% net and up. That's Buffett. And Coca-Cola in his book. So I assume it's 20%. He's super smart person. Let's see if after 40 years do they still maintain 20% net. And we got ourselves almost 25%, 24.8 net. That's amazing. Walmart is like 5.7% net, and look where they are. Doesn't have Walmart in his portfolio, but he have Coca-Cola. And now you see why. 60% gross, 25% net. That's more than 40 gross, 20 net that he wants to buy. And once he finds those check marks, he moves to the second column, which we will do in a second. And after all these things are correct, he just buy the stocks, like tons and tons of stocks of a company, and he either hold forever or until stuff will change, meaning it will go below 20% net or so on and so forth. So let's go on. That's pretty impressive. There's a reason why Coca-Cola is in his portfolio. I'm in the balance sheet of Coca-Cola. We need to find one ratio in here. Before we do that, we need to just look at the glance of the total assets. We would like that to grow. So we got 87 billion to 2016. Another 87 billion, didn't move a lot. 83 billion went down a little, and now 86 billion a year ago. So it's it's a super grown, mature company. I don't know if they can do like 10x to go from 200 billion to 2 trillion like Apple. Maybe if we go crazy up, and then this market will go up. But in general, they're very mature, they're very stable. Opportunity to buy Coca-Cola was 40 years ago. We shall see if the opportunity is still here. The ratio that we are looking for in the balance sheet is as follows. We're looking for total liabilities. You're gonna open that. Current liabilities we're gonna ignore. Not gonna ignore, just it's like paychecks, salaries, all that stuff day to day that they can pay every month. It's not a big deal. I'm looking for this one in particular, total non-current liabilities. Open that, and we got ourselves this number. Long-term debt and capital, that's what I'm looking for. long-term debt. Yeah, that's all. Long-term debt, 27 billion. I would like this number, not me, Mr. Buffett and me as well, long-term debt to be paid off by the net income that we found on the income statement in 4 years or less. If a company can pay their long-term debt in 4 years or less, you got yourself another check mark. And let's see why Warren Buffett bought 40 years ago and still holding Coca-Cola. If you can just look at the glance long-term debt, it was almost 30 billion, 31 billion, then it went down to 25. You want this number to go down, now it's 27. Give or take, it's a mature company. But let's see the ratio if they can pay their long-term debt in 4 years or less. The long-term debt is 27 billion 516 million. I'm gonna divide it by this again, diluted net income, which is 8 billion.3. So divided by 8,333. And the goal is to have a number of 4 and under, 4 years or less to pay their long-term debt. Let's see. 3 years and a quarter, 3 years and 3 months, something like that. Warren Buffett is a smart person, If he finds and check all the check marks, he's a buyer, but he's not a buyer like he's not buying call options for next week, Neo, Tesla, all that nonsense. He's buying forever because everything point out that this company will be here. 40 years ago, he probably bought it because he thought everything checked out, it will be here 50 years later. And if you buy now, it will probably, Coca-Cola will be here 50 years later. We just need to find out if the price is right, the fair value, the exact price that we will buy as of today. But less than 4 years, they can pay their long-term debt in 4 years or less. They have 60% growth. They have 25% net. That's amazing company. Amazing company. I just like Pepsi. That's all. Let's see the next item, and comment below if you think I'm funny, if this was funny, so I can know that you are watching this video and engaging in a good, and it will also help the algorithm. Some comments, some likes, subscription, all that good stuff. Let's move on to cash. I'm in the cash flow column and I'm looking for a couple of things, and then I'm gonna look at the last ratio that Warren Buffett is looking for before we find the actually fair value. First things first, operating cash flow. The money, the cash flow that Coca-Cola is making from their business, actually selling Coca-Cola products or Sprite or Fanta, as you guys saw. The more people buy and drinks, they don't have to drink, they just have to buy. That's the operating cash flow. It's not cash flow from loans, whatever the case. This is money from the actual core business, which is the best thing that the company can do. So let's see growing, just a glance that it's growing. 2016 it was 8.8 billion, 2017 7.1 billion, it's a little down. 2018 7.6, people start to drink again. Last year it was 10.5 billion. It's like 30% growth. 40 years later, he bought this in the 80s, I think, and 40 years later it went from 7 billion to 10.5 billion. That's like 40% growth in a year of people drinking Coca-Cola. That's insane. And the last 12 months, about 9 billion. So people, I assume because of Corona, they drink booze. And yeah, basically. That's all I need to see in the operating cash flow, that the money is flowing from the actual operation of the business, which is selling Coca-Cola and other brands that they own. Next item on our list is this one, investing cash flow. And for this I want to see a negative number, which I do. I see a minus 7 billion. That means how the management expand, growth, buying other brands, other companies, investing their free cash flow back into the business and actually paying shareholders and so on and so on. If you can see in the last trailing 12 months, it went from 4 billion investment to 7 billion, and this is a nice thing to see. It's almost 100% jump. So in the last 12 months, everyone was stuck at home, but Coca-Cola expanded by double what they expanded before, which is insane. This is a forever company. If you drink Coca-Cola, and even if you don't, if it's look for all the financial statements Warren Buffett is looking for, and if the price is right, maybe add to your retirement portfolio and get 3% dividend and enjoy growth, yearly growth forever. They keep growing. It's insane. 40 years later, they keep growing. It's like 100 years later. I don't know when they got invented, but 40 years later after Buffett buys, they're still growing. So I like to see that, invest in cash flow, they're investing back in the business. It's a good thing. And let's go to the next item on our list, which is finance cash. Next item on our list is finance cash flow. Ideally, I would like to see a negative number, but in the last 12 months, we see a positive number. And you can see here, it is a negative number all the time. Minus 6 billion, minus 7 billion, minus 10 billion, minus 9 billion. And now it went to like plus 2.3 billion. That's like people are not buying Coca Cola. That's bad. It's not like they're not buying, but it's not ideal. They went from finance cash flow of minus 9 billion to plus 2.3. That's $11 billion. That wasn't supposed to be. Let's see exactly what happened so we can understand what is going on with the finance of Coca Cola. Let's see. You open here, net issue. Let's click. He took a long-term debt. They took a long-term debt of 30 billion, and they pay off another long-term debt of 21 billion. So they had 21 billion debt. They covered that, but they got themselves into another 9 billion debt, which is not a good sign. Not a good sign at all. Look at 2019. They had 23 billion debt that they took, and they paid 24 and probably covered that. And in here, the ratio is 27 to 30, 29 to 28. Now the ratio is higher. It's 30 to 21. It's extra 30% debt, or 9 billion. It's not a good sign. Stall the growth of Coca-Cola unless we are in a bubble and everything will pump. But ideally, you don't want to see that. That's not a good number. What else did they do is this one. They paid a cash dividend. That's what I would like to see. Almost $7 billion. I would like this number to grow. And it's actually growing. You see it's 6.8 billion and now 7 billion almost. If you go all the way, we got 6 billion, 6.3 billion, 6.6 billion, 6.8 and 6.9. So they're growing their dividends. So their shareholders is getting more and more dividend every year, which is a good thing. That's at the end of the day, it's Coca-Cola. Before we go on the next ratio that Mr. Buffett is looking for, let's see what happened exactly. Issue of capital stock. Dilute the shareholders, issue more stock, probably as part of the big loan that they just took. It's not a good sign. Another 600 million, issue of more stock. It's not a good, but it's a lot less than the 1 billion stock that they issued before, and 1.5 billion and 1.6. So I assume, first of all, it's a good fine. It's not ideal, it's not perfect, but it is going lower. So the issue stock like a couple of years ago, 1.6, then 1.4, then 1 billion, and then 600 million. So it's going down. I assume this is like a long-term debt of some company that they gave them loan plus shares, and those shares go to that company. Just my assumption. I don't follow Coca-Cola on a daily basis. They also issued debt, that's what we saw, of $30 billion, and they repay a debt of 21. That's exactly what we saw. But here's another good thing. Other than the dividend, we got ourselves a buyback. This is what I want to see. Repurchase of capital stock. They did a buyback of about $500 million. Before that, it was 1.1 billion. For that it was almost 2 billion. For that it was 3.6 billion. So the ratio is going down. They're doing buybacks, but not as 5 years ago, and they're taking a debt that is a lot higher than 5 years ago. That's it's not a good sign. The ratios are great so far, but it's not a good sign. It's not a 10 bagger from here. It's a 10 bagger from 1980s. And probably like 100 bagger or something, as Mr. Buffett. But you want to see this number. You want to see a repurchase of capital stock. That means that Coca-Cola management believe in Coca-Cola and actually buying back their stock. But I would like to see more than 1.1 billion and not half, because 1.1 billion here, 2 billion here, 3.6, it's like half all the time. Half of this, now half of this. Let's see, maybe next year they will just stop doing buyback, or maybe they think the whole market is expensive and waiting for a correction. Who knows? After that, we can see the free cash flow. It's 7.3 billion, down from 8.4. 1 billion less. That's not good. But that 8.4, it was 6 billion 2 years ago. 5 billion, 6.5. You know, it's a super mature company, Coca Cola. How far can you expand if everyone already knows you and you're already all over the place, all over the world? Who knows? Maybe they will put some Coca Cola vending machine on March. With Elon Musk and Tesla when we go to the moon or space. If you find my jokes corny, comment below and click the like and also the subscribe button. Let's find the last ratio that Warren Buffett is looking for before we can actually find the fair value of the stock Coca-Cola. So we're taking this ratio, capital expenditure 1.6 billion. 1607, and we're dividing that by the net income again. We're gonna go back to income statement, scroll all the way to the diluted net income right here, divided by 8333. And Warren Buffett would like to see a couple of things. 25% and down, that's number one. If it's below 25%, meaning that the management is spending their cash wisely, and you can count on the management of the company of Coca-Cola to spend their excess free cash flow wisely. If it's below 25, if it's 25 and 50%, management spend their free cash flow as an average company, and anything over 50%, the management spends their extra money pretty poorly. That's all you need to know. So let's click and hope to see a number below 25. Yeah, that's Coca-Cola, 19%. There's a reason why Warren Buffett is a buyer and forever holder. 19%, that means that the company, the management spend their free cash flow wisely. I didn't like the fact that they had long-term debt of 30 billion that they took. I didn't like the fact that they did a buyback. I did like the fact that they did a buyback, but it's half of what they did a year ago and another half of what they did the year before that. It's not a good sign. You know, they have tons of competition other than Pepsi, and people are also thinking sugar and all that stuff. Moving into water and so on and so forth. We got all those ratios into Warren Buffett, all those ratios checked out, and he would be a buyer, and he actually was a buyer and still is a buyer, and he gets 3% dividend. Let's see the price, and if he would buy today Coca-Cola, let's see two things: the fair value of Coca-Cola today and the price that Warren Buffett would be a buyer to. So I got myself a number of here, AAA bond yield of Coca-Cola. I found 3.2 and 3.3. I'm taking the higher number just to stay conservative. And basically once I click enter, I'm gonna find Coca-Cola fair value as of today. And I'm gonna find the price that Warren Buffett will be a buyer as of today, if all the check marks check out, and they did. They got over 40% gross. They got like 60. They got over 20% net. They got 25. They can pay their long-term debt in 4 years or less. It's like 3.3 years, which is pretty awesome. I didn't like the fact that they took a debt, but the ratio, the management spends about 19%, which is less than 25. So they spend their free cash flow wisely. You know, it was a perfect company 40 years ago. Now I would give it like 8.8 out of 10. Let's find the price that we would actually be a buyer before we find the fair value, guys. Let me introduce myself. My name is Ziv, also known as Finance After 40, and while I am new to YouTube, you can find me in the description below, in TikTok, where I have over 15,000 community members following me, as well as Patreon. We got about 150 members, where we do selling options for income, some crypto picks, and you can also get that Excel for yourself. Just put the company that you like and you will find the fair value according to Warren Buffett, as mentioned in the Intelligent Investment book. Hope this helps. Let's click and find the fair value of Coca Cola. 36 bucks. 36 bucks as of today. It's at 53. I think in March when we had the crash it was around 30, 32. That was the time to buy. The price that Buffett will be a buyer is 24. I highly doubt we will ever see 24. But 36, you know, if we get another correction, let's see the price. 36 divided by 53. It's about 100 minus 68. 32% down. Only in March, and since then it probably did another 100%. So if we're going to go down, I would consider buying. I wouldn't consider buying. I like Pepsi. Yeah, and you saw the buybacks and the big debt. At 53, it's overvalued as of today, but that's what we got. You can't, you know, Buffett didn't buy today at 53. He bought 40 years ago when it was, I don't know what, $2 or something, or 80 cents. Whatever the case, I don't know. I don't follow Coca-Cola. And if you find value in this video, guys, don't forget to hit the subscribe button, hit the bell notification, leave a comment which stock would you like me to do next. This was a request of one of the comments below of other videos that I made. Watch the other stuff that I'm doing, and yeah, and I will see you guys next time. Thank you.